Yes, yes, perfect, perfect, perfect.
Yes, sir. I think we should check with Mr. Karthik Raja also. Mr. Karthik?
Yeah, so he'll be there. Yeah, after my presentation, only he'll do. So no problem. We can start.
Fine, sir.
Yeah.
Yes, I think we should ask.
You mute everyone before you do that.
Pardon, sir. Shall I unmute everybody, sir?
No, mute everyone. So there is
Already,
somebody else
already,
is
unmute-
talking.
already
Okay,
unmute
great.
everybody.
Yeah, yeah, yeah. Okay. Sendil.
Hello, guys. Good afternoon to everybody. Today we are just going to, see the webinar on currency outlook and securities market overview. Where I just welcome our speakers Sindhir Velan sir and Mr. Karthik Raja from UPDIS Consultancy. And I think this session would be very useful to everyone on this said topic actually. So I request Sindhir Velan sir to start the session now. So over to you, sir. Thank you.
Yeah. Mm, thanks, Ram. Thanks for the opportunity given to address the Goodwill, my fellow friends once again. And Ram, I request you to make VR Senthil also admin so that he will share the presentation.
Yes, sir. One second.
While he's doing it, let us talk about the current happenings. Good evening, guys. All Goodwill guys must have got your appraisal. Everyone must be in a happy mood. I presume so, and wish you a happy, financial year ahead coming in, right? We have spoken about the currency derivatives many a times with the team and with you guys. But there was one handicap with which we were not able to proceed further on those days because we did not have this NISM certificate problem. Though you guys are intended to activate BSC currency, do it better. But the issue was that we were not able to do it before because of the reason like we did not have the currency certificate, we did not have the currency terminal. And recently, we have come out with an option that, in a new employee category, every branch can say that one employee is the new employee and he will produce a certificate within a year at a time. So on that basis, every branches and sub-broker offices are getting activated now. So given that scenario, you all from the different branches and you who is going to trade on currency or who is going to educate the customers on currency. So we are organizing this seminar. So in this, we will discuss about currency derivatives. Why currency now, basically? Okay. Why currency now? If you ask, in the current peak margin scenario, in the current collateral segregation and collateral allocation scenario, managing the client fund seems to be really difficult. So we'll move to the next slide. One should be aware the current scenario is not really supporting you to trade in either in gold regular or Nifty or Sensex, whatever, which is costing you 1.5 lakh rupees to 3.5 lakh rupees margin money. And volatility is concerned, everywhere volatility is there. It is not only the currency. Currency is anyway volatile, you must be all aware of. In recent July 21st, it has touched the 80, body called benchmark price. Okay, psychological resistance price, it touched 80 during 21st March, 25th July. So that way, everything is volatile. But again, in the volatile scenario, one should be able to take money out of it, right? If you're trying to take money out of it, you should put more money when the gold is concerned or the currency, the commodities and even Nifty or Bank Nifty and all, you should put more money to trade in. Wherein in the currency case, it is the only one asset class where you can put some 2000 rupees, 500 rupees also. Or if you get into options as low as 100 rupees options also, you can take and trade in the currency derivatives. That is one advantage. And second advantage is that the loss is also restricted. When I say the profit restricted, the loss is also restricted to the extent of say 30 paisa. So those things we'll discuss later. So the loss is also restricted and the profit also restricted. So for a learner, it will be the great asset class. That's the reason why we are talking about currency today. And fundamentals. See, if you talk about any currency, I mean any asset class, one should understand the particular what do you call the fundamentals of the particular asset class before you get into trade, right? In that way, the currency fundamentals are the easiest one for any learner to understand and start trading in the asset class. It is not as tough as the Sensex or Nifty or each individual scripts where you go learn the company profile, promoter profile, pledged securities, unpledged securities, loans and actions and whatnot. So there are many things one should learn about fundamentals and technicals. Then only you are good to go with the trading in the 1 second. Good to go with the trading in. I'm just getting it got calls. So good to go with trading in the other asset classes. So currency is the one easy asset class. Anyone, a common man, come and just like that understand the fundamental and trade, right? And here also you have various futures, weekly futures, monthly futures, weekly options, monthly options. So you will have various strategies can be employed, deployed here for beautiful trading, right? And cost of trading also very less, with which even single tick size. Here the tick size is called quarter paisa. The quarter paisa itself you will be able to break even. That is the reason why we are going to discuss about currency now. So currency market, right? The currency market evolved way back, right? It is in centuries now. Not now, it is in centuries now. So there is something called foreign exchange market. We call it as currency market as a foreign exchange market, where you will have OTC, which is traded at the OTC counter. The other one is exchange traded counter. Sendil, change the slide. Be with me. So over the counter slide, the over the counter thing is also there, and then exchange traded currency derivatives also there. In exchange, we are there, and NSE also there. In future, in OTC market, we call spot trades. Spot also there are 3 trades are there. TOD means today. Tom means tomorrow, and then spot means spot. So it means spot is today, Tom is yesterday. TOD is yesterday, and Tom is day before yesterday. So currency has different accept timings and different names also for trading, which currently let us not get into spot forwards and options and all. We'll restrict ourselves to exchange traded funds. Okay. Now the Indian OTC market is size of 80th largest market in terms of daily turnover worldwide, and we are around in that having a bigger junk. And we have started the currency derivatives, basically USD, INR and all, around 2008. The first exchange which started USD, INR futures trading by 2008 is a MCA stock exchange. Later on, the other pairs like Euro INR, GPY INR, JPY INR and all introduced later on. So the average volume started when I was with the MCAX. The average volumes were around 1,200. We started, and it touched to 70,700 crores in 21. In 22, sometime it touched 1 lakh crores and all, right? So currently you also have cross currencies, Euro USD, GBP USD, USD JPY, all these things are all available. So whenever I say this USD INR or JPY INR or Euro INR, the first currency is called base currency. When I say USD is a base currency. When I say INR is a reference currency. So wherever you go, people will talk currency in terms of pairs only. You cannot directly talk pair. For example, if you talk about USD INR, so 1 INR is equivalent to say 75 rupees. That way you need to speak. So the USD is the base currency and INR is the reference currency. Keep that in mind. And if you see USD-INR, I don't know how many of you know, the USD-INR concept itself evolved during 1971 time. By then, it was like, $1 is equal to 7 rupees. And 2005-6 type, it's all around 30 rupees, 40 rupees, right? Now, today we are sitting at 79, 80 rupees per US dollar. That is how the currency market evolved. So now let us get into the how this is grown over a period of time. 2008 it started. I told you. 2011 it has gone to the maximum of 42,700 crores volume. Then the restriction of open interest and all happened because of the RBI intervention. They don't want to allow the FIIs and the other banks to come and get in. Because of that, the volume has gone up, gone up to the level of 50,000, then gone down to the level of 15,000. But BSE was not pioneer in this. Basically, MCSX started, later on NSE started. BSE started somewhere around 2013, but now currently we are close to 50% of the market share in all the asset classes. So then after some time, 2018 type, the RBI has really restricted they removed the restrictions on open interest, NRI, banks, and other things. So from then on, the volume started zooming up. 2021, as I told you, 70,700 crores we have done. And now we have got weekly futures also, weekly options also, and all cross currencies also we have. Now we will go to the factors affecting the currency rates, which is more and most important thing one has to understand. Remaining all, it is all easy, or you don't need to understand also. When you are in the market and when you are advising the customers or client to buy or sell, you need to understand which are all the major factors affecting the exchange, rates. Okay. Today we'll start from here, right? Say fundamental factors. Fundamental factors we see here, whatever given are all for fundamental factors, but Namkevas we say something as fundamental factors. Say for example, inflation. Okay, inflation is going up. Today also you must have seen that RBI had set up a committee. The committee has come up, the MCP committee has come, and they have announced the increase of repo rate by 50 basis points. This has happened. This is two correlation. One is like you can see here, central bank in intervention. Other one, fundamental factors. Both are one and the same. So why central bank? Central bank is an Indian bank. That is RBI for India. Why the central bank has come suddenly and increased the interest rate by 50 basis points? If you calculate, I think from April to July, we have increased the interest rate around 1.5%, which is standing out to close to 5.4%. The repo rate is close to 5.4%. Whereas an US federal also increased the interest rate, it has come to 2.25%, I think. And European Central Bank also increased interest rate, which has come to 1.75%. See, the all around the globe, everyone is increasing the interest rate, basically to control the inflation. Suppose you all must be hearing the news, inflation is going up. See, the wholesale price index and customer price index. Customer price index is hovering around 7.59%, in close to double digit, and your wholesale price index is around 20%, right? So inflation is also going up. It's not coming down. So RBI, whenever this kind of crisis happen, any central bank will come and intervene and announce the repo rate policies. That way, they increase the interest rate. What does it mean to you? If the Reserve Bank increase interest rate, the lending rate will go up. Suppose if I have a cash in hand, I will not go and spend money unnecessarily. Rather, I will put it on a bank, or I will lend it for a higher interest rate, which means the money liquidity will go down, which means the food prices, demand will go down. So the commodities or food prices go down. So that is the reason why the Reserve Bank of India increase the interest rate. Which means what? Which means what? If the currency interest rate is increased, there will be a lot of even the currency inflow will come. Suppose somebody is having a dollar US, if he is investing there, he is getting 2.5%. If he is investing that, converting that into rupee and coming here, if he is getting 5.5%, the dollar inflow will go up, means rupee will appreciate. So the uncirculated rupee, the unwanted, say suppose if you are having money and you go and keep on buying gold, so which is getting stuck and not there in the system, which will increase the inflation. Instead of that, if it is coming to the banks, the particular currency will appreciate. That is the reason why today you must have seen the rupee hovering around 79.2 or something. So if this continue to happen in the banks, the rupee will continue to appreciate. You will see 78 or 77 point something in coming days. Okay, that is one called inflation. Second is called crude oil price, which you will also be seeing everyday basis. What does it mean to you? See, basically, I think now the crude oil prices are eased out. It is not like before. At $90 per barrel, it is getting traded. Why it is important for any country like India? We are importing more of the crude oil for our petrol, diesel vehicle purpose and the factory purpose. If the crude oil prices are going up, the rupee going out will be more. Then the rupee will depreciate. It will go to 79 to 79.5, 80. Rupee depreciate means it will go up 79, 79, 80 and all, right? So that is where the crude oil prices are important for us. The same way, trade balance. Trade balance is what basically whatever the difference between the exports and imports. If we have more of exports and less of imports, which means we are going to get more of foreign currency. So our forex reserve will go up. The forex reserve last pre-pandemic, I think it was around 600 billion, and today it is around 560 billion around. So the forex reserves are going down. So if the forex reserves are going down, if the forex reserves are going down, the rupee will depreciate, right? So that is the idea. This is how one has to infer this. How the trade balance or export-import difference will make important decisions. So other important fundamental is capital flows. So FII, DAA. Daily you must be seeing in the market or in the news how much DAIs has put in money, how much FIIs have pump in money in Indian capital market, right? So if the lot of money coming in India, like FII, DA, net inflows going up means the Sensex Nifty will go up. Means there are a lot of money coming inside, dollar coming inside. So the rupee will appreciate. So one should sell. See, for example, 79 to 86, 78.9, 78.7. So if you see Sensex Nifty moving up in the market, if it is because of DIS and FAS inflow, then you need to sell USD INR. That is what it says. So it is very easy fundamental. You are sitting in the market, you are watching the market. When the market open, you see the Sensex goes in your Nifty going up, immediately you should sell the USD INR, right? Central bank interventions, anyway, we discuss. Next is policy decisions. What policy decision is important? As I said, the repo rate, reverse repo rate, CRR, all these things are important. More than that, what is important is that, suppose, why this monetary policies are today monetary policy committee meeting we had, right? Same way, every bank, may it be federal bank, may it be European Central Bank or Reserve Bank of India, we also have a lot of meeting and we decide, for example, monetization scheme. Why do we do monetization scheme? When you see less employment, when you see the corona damage, when you see any other political issues. So because of that, if the economy is in doldrum, the economy is not really developing, then the government will come and announce monetization policy. Meaning what? You print more currency and circulate it. If you print more currency and circulate, the currency will depreciate, right? Not appreciate. Then 79 will become 80. But the money will be there in the liquidity, and then a lot of manufacturing will start, and process will be over, and economy will be developing. Once economy develop, then they'll start squeezing the money. Squeezing the money means increase the interest rate, bring the money back into the system. That's how the government plans. So when you announce a monetary policy, the rupee tends to depreciate. When you increase the repo rate or reverse repo rate, the money tends to appreciate. So this is how the policy decisions are also affecting. Then movement in USD INR or see, basically whenever I say currency, it is not USD INR, it is not only INR, it is USD also, there is GBP also, Euro also, and for example, US dollar index also. So because one currency is dependent on the other currency, the other currency is dependent on the other currency. So basically, if the movement in, for example, if USD dollar index is very strong, all other currencies in the globe will tend to depreciate. If USD dollar index is low, then the other currencies all tend to appreciate. So this is all interconnected. Okay, the European Central Bank decision also will impact Indian currency because we also export, import, we also have tourism in Europe. So ideally, there are a lot of currency inflows and flows happening. Because of that also, it will impact. And global and domestic stock market information. What is it? Basically, for example, if the US market doing well in the night, next day Indian market expected to do well. The same way Singapore doing well, next day Indian market used to do well. So the market dependency generally 80 to 90% of the correlation. If the international market does well, the whole global economy is well, we also tend to go up. But it is not, it may not actually true also. Majority of the economy in Asian countries are not really good. It may be Pakistan, may be Sri Lanka, may be any other country. Whereas India is not that first. We are in a stable situation. Our currency is also stable and we are in a development path. We may not be falling in the same 100% correlation. But having said that, this particular impact, for example, Taiwan-China impact, will impact indirectly and directly India also. So that's the reason why the currency appreciation should have happened now, which is not happening. So these are all the basic, simple, fundamental, which will affect the prices. So what one should look for, morning, if you wake up, you see the SGX Nifty gone up, then you assume that tomorrow, today, there are a lot of FAI, DAX inflows will come. So the Sensex Nifty will go up. So I will sell rupee dollar before the market open. If you see SGX Nifty is down by 200 points, American markets are down by 2%, 1.5%, then you know that Indian market is going to go down. The beginning, gap down opening is going to go down. The moment market opens, I will buy the US dollar INR. Simple tool. And today, RBI expectations known to everybody because everywhere, the global other countries are increasing the interest rate. RBI also increase interest rate. It is very known fact that they are increasing, the rupee is going to depreciate. I know that many of the people in the industry at 80 rupees, they're all gone for short. They must be in profit, but they must be holding the position also, right? Even see, assume the other way around. I am the exporter, right? So there is something called hedging. We come to that later. If I'm an exporter, what I will do, if the rupee appreciate, for example, if the is 80 to 70, 70 to 60 and all, if it is coming, if I export, my net receivable will be bad, right? So what I would have done in the exchange, I would go sold it in the exchange, right? So that when the rupee going down, I'll get the benefit out of it, right now. So if I'm an exporter, I would have sold it, so I would have made money here. But instead of that, if our market is appreciating, right? So what I will do, I will unwind position. Then because of that itself, market will take a different turn. So we'll come to that later, right? When hedging comes. Go to the next slide, Sandeep. So next slide, you see we have contract like USD INR, Euro INR, JPY INR. We have 5 major currencies. In that 5 major currencies, USD INR is the major currency which is getting traded, and JPY INR only 1 lakh, leaving other things, Euro 1000 Euro, GBP 1000 GBP, and USD INR also 1000 USD INR. And we have weekly contract in USD INR. Monthly options we also have in all the 4 contract, USD INR, Euro INR, GBP INR, JPY INR, everything we have monthly options. So what is the market timing? Morning 9 o'clock to evening 5 o'clock. Tick size, right? Like 5 paisa in equities or 1 rupee in gold. Here the tick size is quarter paisa, 0.0025 rupees or quarter paisa. Rupees per quote. So there it is INR USD, and everywhere here INR per euro, INR per GBP, and INR by Japanese yen. We have 11 weekly consecutive contracts getting traded in weekly. In monthly, we have 12 monthly contracts. For example, starting August, you will get next July 2023 also. You have contracts traded. In options, next 3 months options contract, then one quarterly contract is getting traded. In options, we'll have 12 in the money, 12 out of the money, and one at the money contract we have. And that tick size there also quarter paisa. In addition to all these things, you also have spread contract, like August September spread contract, September October spread contract, which will explain you the different ideal difference should be what should be the difference between August and September. Maybe 0.2 20 paisa or 30 paisa 20 paisa it will get traded, where your margin requirement will be very less, like 100 rupees 50 rupees and all. Those contracts also available. Margins anyway close to 3% to 4% margin levels, not more than that. And settlement is same like any other thing, T+1 settlement. And final delivery, there is no delivery, it is basically cash settlement. And the closing price will be fixed on the 2 days prior to the expiry. I mean, month end, the price given by RBI closing reference rate, that will come 12:30 of the particular day. So if 30th is expiry, the contract will get closed on 27th afternoon 12:30. By then, whatever the RBI reference rate is the final closing rate. So the future will get settled at the RBI reference rate. RBI reference rate is supposed to be the spot rate of the particular contract. Go to the next slide, Sandeep. Now, there are difference between a lot of exchange traded contracts and OTC contracts, which is we are not interested in this. But when you go to an exporter or an importer, you need to tell this. See, basically, they have to go to a bank for remittance of the rupee. Suppose you are an importer, you have to remit the rupee, they'll make it a dollar and send it to the abroad seller whomsoever you bought from. So same way, anybody should go to the bank for a forward position. But if you hedge in forward, there are difference, like, here, for example, 79.25 is the price for everybody. But there it is not that. For a bigger guy, they'll say 79.79. For a poor guy, they'll say 79.70, something like that. So there'll be bid ask difference also would be there. And in a forward contract, you can't exit or enter as you want. You cannot do that way. And again, the commission charges to enter and exit in the contract are huge. And there is no great liquidity in the market. And market timing also not like as you want. So these are all the facilities. When the exporter importer going there, they will not get it. And anytime we can get here, any quantity, $5 lakh, $10 lakh, $1 lakh, any lakh dollars, if we wanted to buy or sell, it is easy in the exchange, but not in the forward market. Go to the next slide. One more example, which you need to explain the exporter, importer, or corporate, whomsoever you are meeting. Basically, in the exchange traded contract, I mean, the forex traded contract, I mean, OTC markets, earlier there was a 20 days before, there was a situation that these guys have to make necessarily the rupee to dollar and remit that into the respective currency, respective country. But 15 days before, RBI has come out of their circular stating that the exporter or importer can remit only in rupee terms, and they do not go to, they don't require to change it to dollar and remit, right? In such a case, they can do the hedging activity purely in BSE, while the remittance comes, okay, when they are supposed to make the payment only, they need to go to the bank and put the cash there, right? Up till then, they can do the hedging in BSE with many minimal charges. There is no, if you go to OTC, the charges will be more. In BSE, the charges will be very less. Go to the next slide, Sandeep. So now, this is basically a hedging example. For example, somebody, the guy wanted to export, right? Whosoever exporting will have a risk of what risk he'll have? If somebody is exporting, he will have a risk of one sec. Getting a call. So here, think of the situation. Somebody is having an exporter, he is delivering $1 worth of material. What kind of risk he will be? He is having a risk of price going down. While he is exporting, if it is 79 rupees, assuming 79 is export, but after the month only he is going to get the money back to him. By then, if it is 78 rupees, if it is done for $1 lakh, then 1 lakh into 1 rupee, you will lose 1 lakh rupees money there, right? Instead of that, if he is selling in the exchange, he is supposed to sell in the exchange the futures contract at 79 rupees. After a month, if that comes to 78 rupees, he will close it at 78 rupees in BSE. So 1 lakh rupee money will come. But whatever the money he will get also will be reduced by 1 lakh. So this will get adjusted. That is the reason why if you meet an exporter, you ask him to sell in the BSE. If he is going to be an importer, what risk he will face? Today he is importing when the currency is at 79 rupees. Suppose when he is making the payment, right, after a month, if rupee depreciated has gone to 80 rupees, he will have to make the extra payment of 1 lakh rupees. Instead of that, he has to buy in the BSE exchange whenever you go for the order placement, right? So the price went up to 79 to 80. So you may make 1 lakh rupees profit in BSE, 1 lakh hours in the this physical business, which is getting adjusted. So the currency is very important for you guys, sales guys. Currency market is the only market where you can go and easily convince a corporate. If the corporate comes in, no, they will not go out also because there is no loss, right? They can continue to be there in the market. So you can advise this to your clients. Move to the next slide, Sandil. So let us not discuss more. We'll give time to guy, our friend Karthik. So basic currency derivatives launched, all those things is fine. Go to the next slide. So this is like BSE reasonable charges. We'll discuss about that. Otherwise, BSE, NSE, or any MCSS, everything are one and the same. So this is very important. Cost. Okay. If you wanted to buy one lot in BSE, to cover this, okay, you are buying at say 74 rupees and 33 paisa 25, and you sell at 33.50, and your total cost is 61 paisa only. To buy one lot and sell one lot, it is only say 61 paisa only. I said contract size is 1000 and tick size is 0.25, which means one tick size, quarter paisa movement will give you 2.5 rupees. 1 paisa movement will give you 10 rupees. If you get 10 rupees, the cost itself is only 0.61 rupees. I mean, 50 paisa, 65 type. Okay. In a day, the market moves by 30 points, minimum 30 points. If a market moves by 30 points, having you understand the fundamental, if you are in the right position, it is not difficult to make 10 points. Say, for example, 10 paisa. Okay, 1 paisa movement to 10 rupees, 10 paisa movement will give 100 rupees. If you take 10 lots, 10 into 100, 1000 rupees, minus this 1 rupee, 2 rupee cost, okay, in 1000 rupees, your profit will be more than that of 950 rupees. And what kind of margin you will use? 1500 into 10 lots, 15,000 rupees in futures. Otherwise, 500 into say this one, maybe around 700, 800 rupees in the options. So cost of trading is much less here. No other asset class has this kind of cost of trading. If you wanted to do the same, as usually buy like equity, go and do it in NSE, this will not have break even in single shot because their turnover charges are more than that of BSE. We are charging the say 20-30 rupees. They are charging around 100 rupees. So the exchange transaction charges are very less. So, and hence I will advise you to guys to trade in BSE. And as I told you, fundamentals are easy to understand and trading is also easy. Go to the next slide, Sandeep. So you take a client, onboard the client via Goodwill, and as you understand the fundamentals, please ask your clients to trade in USD INR. Majorly 90% of the trade happens in NSDPs are all in USD INR only. And somebody exporter, if you are getting, they will trade in Euro INR. So basically focus only in USD INR and Euro INR. and keep asking your clients to do trade in currency segment. More importantly, the learner, the newcomer, the first comer client should be exposed to currency only first, so that they are stable there with you. Their shelf life time with you would go long. Okay, so I would advise you guys to have currency on your all trading terminal. I would request you to enable your clients with currency, and activate the clients with the currency segment, educate them. And any support in terms of meeting corporate, my colleague Leo is there. He is based out of Cochin. And anybody close to Tamil Nadu, my other colleague VR Sendil is there, and I am there. We are ready to jointly come with you guys to meet any HNI and corporate, and more importantly, any associations, like for Leather Exports Promotion Council, or the Sitco, or for example Tirupur Exporters Association, or example Seafood Exporters Association of Cochin, right? Anything in rubber, these kind of association also, you just approach. Leo will come, he'll jointly go and do a program for them, where all the exporters importers will come. So you will get big HNIs or corporate clients with you. With this, I'll close my discussion. Thanks a lot, Ram and Goodwill team, for organizing such a wonderful session. Thanks a lot. Over to you, Mr. Ram.
Good evening, Sindel. Hi. Sindel, are you there?
Good evening, good evening.
Yeah.
Hi.
Is my slide is viewable?
Yes, I can.
Yes. Thank you. Good evening, everyone. I'm Karthik Raja, SEBI registered research analyst. Well, I'm going to give you a market outlook for the upcoming days. Let's start with the disclaimer. This content of this presentation is only for the information of participants and not to be construed as the investment advice. So please consult your financial advisor before acting on it. And let me start with the global market performance. So if you look at the global market performance, US market almost closed flat yesterday, and the UK market also followed this same. And Asian markets today performed very well, and Indian market BSE Sensex performed nearly 150 points upward momentum. And this is a gold chart, international gold chart. So gold prices fell last month to the lowest due to the interest rate hike by major central banks of world, and to cool down the rising inflation. So it is expected to trade in a range of 1660 to 1845 levels. Look at the medium support level I have marked here. So 1660, which is very tough to break this level to the downside. So whenever it hits this level, buying a dip is approached here. So from here, the market is likely to recover $20.70, and 52-week low is 1678. And the gold decline from 52-week high is around close to 19%, and it recovered from its 7.9%. And current So as I mentioned earlier, 1660 is likely to be a very, very strong support, and the resistance available around 1801, 1827 and 1842, and the support for the gold 1685, 1673 and 1654. And the short-term chart pattern looks very, very good for the upward momentum, and expect to the market is expected to trade around 1660 to 1842 in upcoming session. This is the range, and the entire positive view gets negated on breaking 1660 for a medium-term perspective. So until the market will be very strong towards 1842 levels, and the medium term, as I earlier told, 1660 levels is going to be a very, very strong level, which is unlikely to break downside. And the Indian gold October future is likely to test a higher of 53,000 and 54,000, and even 55,300 also the final level with the support of 51,000. And this is a crude oil outlook, and crude oil WTI futures after hitting 130.5 52-week high. Chart seen a parabolic curve. Whenever you see the parabolic curve followed by the heavy corrections and occasional recovery had, but overall the trend becomes negative. So major medium-term support likely to be around 81.94 levels. So there is a high possibility of taking support from 81.70 to 82.10 and may reverse back to 95 levels. So the range between 81.70 to 96 in the upcoming days we can expect. And the crude oil currently trading around 88 levels, and the near-term trend is almost down, and crude oil WTI above 91.45 is likely to move towards 92.45, 93.75 and 95.25. And crude oil below 87.6, then only the market may turn towards the 86.15, 84.30 and 81.64. So 87.60 is playing a vital role to the downside, and occasionally pullback attempt is possible, but overall the major support around 81.94 levels is very, very important. And for the resistance is 90.40 and 91.45, 92.45. And the support, as I told you earlier, 87.60 and 84.30. And the very strong support at 81.75, which is unlikely to break for at least for a month or 2 months. So which is going to be a very, very strong support. And all indicators at this present situation seems to be oversold, and pullback attempt cannot be ruled out. So time to time, you will get a pullback rally from each and every support from already mentioned in the above area. And the entire negative view negates on breaking above 95.80 for a short term. So 95.80 and above, if it gets sustained, the short term will be good for the crude oil market. And the crude oil WTI futures almost declined 32, almost 33% from the 52-week high. So there will be a time-to-time pullback attempt in the upcoming sessions. And for the Indian market, crude oil likely to trade in a range of 6,200 to 7,400 levels in upcoming sessions. And for the USD as we keep telling in every seminar, so which is continuously moving upward, and the final resistance is around 82.10 levels, and previously I told 80.50 is the major level. So before that it started booking a profit. So investor will remain very, very cautious ahead of the major central bank monetary policy meetings. And USD INR August is expected to trade in a range of 78.30 to 80.50. So volatility is inevitable in upcoming sessions, but the medium term likely to be around 76.32 levels. So rupee hits 80 mark to the dollar for the first time in the July month, and there will be an impact related to the interest rate hikes across global. And the currently trading around 79.20. Speculative trend is up and down, and overall short-term trend seems to be in the negative zone until it crosses 79.50. So USD INR 79.85 is likely to move towards 80.21, 80.41, and 80.55, and USD INR below 78.39, then there is a chances of going down towards 78.10, 77.80, and 77.50. And the resistance already given. And the short term seems to be very, very overheated. The caution required for all long position. I suggest stay light with the long positions. Anytime anything can happen. So please keep a strict stop loss for your all quantities in the long position too. And all technical indicators almost in the overbought zone, so need very, very cautious. So entire positive view gets negates, breaking below 78.39 for a short term. So the 78.39 is going to be the crucial significant level for the market, and which will act as a major support for the market too. And we expect rupee to remain under pressure in the near term. So USD INR August is expected to trade in a range of 78.39 and towards 80.50 in upcoming session. So below 78.39, the overall USD market will go down. And for the US Euro INR, so if you look at the chart, almost the trend is down nearly from June onwards, and Euro INR August above 81.31 is a positive towards 81.60, 81.80, and 82.02. And Euro August below 80.80 is a weakness towards 80.60 and 80.50 and 80.30. The Euro INR August is expected to trade in a range of 83.35 towards a 78.05. So there is a bottom mentioned here in the chart, and 78.05 level is a very important level, which is likely to test in upcoming days as well. And time to time recovery possibility is there in the Euro INR towards the upper end. And for the GBP INR, so similar to the Euro INR, the chart looks like a downtrend, which looked like a breakout, but it doesn't happen. The activity of the market volume is not good. So occasionally we may get a recovery. Need to be very cautious of in taking position. GBP INR August contract above 96.80 is a positive towards 97.15, 97.30, and 90.80. And GBP INR August below 96.04 is a weakness towards 95.80, 95.60, and 95.30. So overall, the resistance is around 96.65 levels. So GBP INR August is expected to trade in a range of 93.10 towards 98.75 in upcoming days. For the Sensex, so major index is doing very good for the last few days. So with around 14% rally from the July low, Sensex is likely to consolidate, and profit booking at higher level is possible. And in a domestic market, the biggest positive is FII turning buyers. So even they turn sellers at a higher level, the intensity of selling will be much lower in the last several months. So we had a very, very long run from 2020 March to October 2021. After that, a big downside consolidation happened over a 9 months period. So which is very, very necessary for the next bull run. And the main important thing happens in the last week is Sensex started trading above 200 days moving average. So which is a positive for a upcoming days. So anyhow, the 56,975 is going to be a very, very important levels in our coming session, followed by the 54,864 levels. Breaking below, we may get some selling pressure over a period of 1 or 2 months. And after that, market is likely to recover. So market looks very, very strong when compared to the global market. And Sensex, as I told, the 52-week high is 62,245 and the low is 50,921. The fall from the October 2021's high is around 18.19%. And after that, July low, and it recovered from the July low is around 15.01%. So which is a very good thing. And currently trading at this level, and Sensex trend is is in the uptrend. And if Sensex sustains above 58,712, is likely to move towards 59,00, 59,412, and 59,700 levels in upcoming days. with a very tight resolution, the market is going to move upwards. Sensex below 57,900, then it is likely to turn towards 56,880 levels and 55,680 levels. So resistance for the Sensex is 58,712, 5900 and 59,412. And for the support for the market is 57,900, 56,880 levels and 55,680 levels. And the pivot levels for the speculative activity is 58,470 levels. Sensex has hit 1 month high, and it is a rising price with the volume is a very positive thing. The entire positive view negates on breaking 56,880 on a closing basis. If it happens, the short term will be under pressure. And the speculative stability looks good because it is trading 20 days moving average, trading above the 20 days moving average. Short term too looks very good because it is trading, the price trading above the 50 days moving average. Long term stability back to the pavilion, so which is a good sign for the entire market. And India VIX, it is trading around 18.92, which indicates the market stability, but above 20 is the first level. 20, above 20 may create some volatility. Above 30 will create uncertainty. So if it goes above 20 levels, so market will have some volatility in the upper side. The Sensex trading range could be 56,880 levels and 59,412 levels in the upcoming sessions. So how to approach this market? Whether the market hits the high, can I buy at this level? No, it is advisable to limit your position for a while because market technically market is overheated at this present situation. There will be a stiffness in the market, and market continuously recovered from the June low, and it is around 15.01% market recovered. So almost if you look at the all sectors except the IT, almost market performed like anything. So it is better to stay light with the long position apart from the in IT sector. So all technical indicators seems to be very overbought condition. So need some cautious approach because the Sensex may perform in a consolidation mode or may get a time-to-time profit booking correction. Until trading above 200 days moving average, every support is a key factor. And if you are buying now, you keep a medium-term perspective. That will give you a good risk-reward ratio. If you are buying for a short term, the risk-reward ratio won't be good for the profit-making ability. So the risk will be more and the reward will be very small. So wait for the lower level and buy at the dips. Again, market will perform in upcoming days. And the market fall, whenever happens, but recently for the IT sector, market continuously falling. And do not panic, stay calm. Stocks may react due to the panic. Stock market may react to the due to the panic, and stocks investors also may react due to the panic. But businesses of those companies don't get panic. So we must always study the future of business, in which way we are investing our hard-earned money. So right time to start accumulating fundamentally quality stocks in each sector for a medium-term perspective. With the 9 to 12 months will give you a wonderful return in upcoming days, especially with the IT sector. And as Warren Buffett said, it is important to understand the businesses of individual stock and its performance regularly. So if the business does well, the stock eventually follows. Why we have talked about this topic? Because we have witnessed a lot of selling pressure in the IT index. So if you look at the IT index, its 52-week high is around 39,447 and 52-week low is 26,189 levels. Almost it declined from 52-week high is 33% fall. So whenever any sector a fall in between 35 to 40, definitely there will be a big support. And if the quality is good, and it is a greater opportunity for the market to pick at the lower price with the fundamentally very strong stocks. So speculative stability seems good because the price trading about 20 days moving average. Short-term stability seems to be good because the 50-day moving average and above the price is doing very well, and medium-term stability at a bearish level. And the speculative resistance is 29,960 level. So sustaining above, which is likely to surge 31,100 and 32,400. And speculative support can be used as a stop loss tool. So 28,280 and 28,000. But buy at every dip, because support will work. Either you can buy a dip or nearby the stock at nearby the support levels. Definitely it will work, and which is likely to give you a 20 to 30% in upcoming months. So medium term positive with the target of 31,000 and 32,000 with the stop loss of 28,000. So these are the stocks in VTCS, Wipro, Tech Mahindra, HCL Tech, LTI, Mindtree looks very, very attractive with the fundamentally quality stocks. So entire positive view gets negates on breaking below 28,000. If it breaks below 28,000, again the bullish may counter this sector as well. But as I have seen, a lot of charts looks very, very attractive for the medium term perspective with the time frame of 3 to 12 months, which is very, very good. And stay invested in this will bring you 20 to 30% return in 3 to 12 months time frame. And this is the global market performance. If you look at the fall from the 52-week high, and NASDAQ holds the highest percentage of fall, around 34% fall, followed by many countries. And if you average all the countries in the world, it comes around 23% fall from the 52-week high from October 2021 onwards till June. And if you compare with the US market and Indian markets totally disconnected from the global market. So we have seen, we heard a lot of news about the recession in US market, UK market, and economy is shrinking like anything. When you compare with the Indian market, looks very, very good. The main indication is the GST collection. Look at the GST collections for the a few months. It keep increasing. So the industries in the India which is doing good, then only they are paying the GST. So GST collection is going good, is a very good indication for the market. So that is the reason our finance minister keeps saying we have no threat under the recession. So we can go for the Indian market is going to rock in upcoming sessions also. And after hitting the low, again the NASDAQ market recovered nearly 20%. Out of global market, London market, Japan market, and Indonesia and Indian market alone trading above the 200 days moving average, which is a positive thing. And India VIX. What is India VIX? So India VIX index, which is looked upon as a parameter of short-term volatility, a surge in India to be a signal of expectation, higher volatility in the market. So what does VIX of 20 and above mean? So in absolute terms, VIX values greater than 30 are generally linked to the larger volatility resulting from the increase of uncertainty, risk, and investors' fear. VIX values below 20 generally corresponded to the stable, stress-free period in the market. What really happens in the last 2 weeks? And this is the very important area. So this is called the top weightage of Sensex 30. I have mentioned 15 top stocks. Out of this, Reliance only holding 12.51% of the total Sensex movement, which means this top 15 stocks holding almost 70% of the market weightage, which means these 15 stocks can change the course of direction at any time. So one want to know about the one want to analyze very close and about the market prediction, can look at these stocks will help you to guide to make a good money as well. If you look at this sector, in total Indian sector, out of this power sector, which holds After hitting the low, it recovers almost 74%, followed by the auto sector 36%, followed by energy and FMCG product. And at present scenario, and the chances are available in the IT sector and followed by the pharma sector. So it is better to stop investing in other sectors, stay light with the other sector, the long position, because wait for a small dipper, because there is a chances of profit in days. If it happens, then you can buy at a support levels for a next level momentum. So what we predicted, the market will be in a consolidation mode for the upcoming sessions, or there will be a time to time profit booking. So wait for the market condition and try to catch at the support levels, and don't catch the stocks at the parabolic area, because whenever if you are buying at risk reward ratio will be much higher than the normal days. And volume, an indicator of liquidity. So trade volume and the liquidity are considered the interrelated terms on the stock market. So large volume plus price action is required. So whenever you are selecting a stock, always choose a large volume plus a price action. So that will bring you a very good profit for your portfolio as well. And the final thing is, the goal is not to buy at a cheaper price, but sell your stocks, which is more than the price you paid, which is very, very important. The people wanted to keep continuing the positions whenever they are in profit. Also, they wanted to continue without trialing the stop loss or any protection. So this is not a good idea. Try to book profit, at least partially, will help you. And you can do a trade like equity market, commodity market, currency market, whatever you do, make some profitable things and keep it in, keep invested in the SIP approach every monthly basis. This will help you to take profit from the every month earned through derivatives segments, and keep invested in the equity market. BSE launched a lot of ETF stocks available in the BSE listed things, and for auto Bs, IT Bs, pharma Bs, so many Bs are available. Try to invest in these areas for a healthy portfolio growth. So this is the reason you can create, you can do derivative segment as one end, and the wealth creation part, you can invest some part of the money earned through derivative segment. So this will parallelly will help you to create a wealth creation. Thank you, guys.
Thanks, Mr. Karthik. Guys, this is the Q&A session, and you may unmute yourself and raise your concerns.